Welcome to this lecture, titled Trade Wins, Global Gains and Pains, where we'll explore how international trade creates opportunities and challenges for economies. Over the next slides, we'll unpack core ideas like comparative advantage, scale economies, winners and losers, policy choices, and practical recommendations to make trade work more fairly for people and places. This slide explains comparative advantage and why countries gain by specializing, even without absolute superiority. The diagram shows differing labor costs and how reallocating workers toward lower relative costs boosts total output. In short, trade lets each partner focus on what they do relatively better, expanding consumption possibilities for both sides. Here we look at economies of scale and consumer benefits from larger markets. The visuals link wider market access to spreading fixed costs, lower unit prices, and faster innovation, while consumers enjoy more choice and value. Together, these firm-level gains raise aggregate productivity, lift real wages, and help drive broader prosperity when reforms support the adjustment. This slide highlights how opening borders can help low-income economies escape narrow domestic demand and low-level traps. By integrating into global value chains, specializing, importing capital goods, and adopting technology, countries can break low productivity cycles. The chart also shows gains are often disproportionate, with scale efficiency and market access unlocking higher growth potential. Here we contrast the disruptive force of imports with the temptation of protectionism. Cheaper foreign goods can squeeze domestic firms and cause regional job losses, creating real adjustment costs. The strategic perspective warns that banning trade may delay adjustment, but ultimately inhibits long-term progress. So adaptation policies matter more than isolation. Trade produces aggregate gains, but also clear losers, and this slide maps those distributional effects. Workers with low mobility, sunset industries, and small local suppliers can face prolonged unemployment without targeted help, so aggregate growth can mask significant localized pain unless policies support retraining and geographic adjustment. This slide outlines policy tools to preserve open markets while helping workers adjust. Instruments like wage insurance, retraining vouchers, portable benefits, and regional development funds make transitions smoother and reduce lock-in. These measures contrast with tariffs, which raise consumer prices and rarely restore lost jobs, demonstrating how supportive policies can share trade gains more equitably. The case study shows unintended outcomes from flat panel display tariffs intended to protect domestic producers. The policy raised costs, prompted firms to relocate assembly abroad, and ultimately eliminated more jobs than the initial import threat. It's a reminder that protection can backfire if firms respond by moving production rather than competing locally. This slide compares WTO principles with the reality of managed trade pressures. The WTO aims for non-discrimination, predictable rules, and enforceable dispute settlement to lock in liberalization, but political pressures promote selective protections, bilateral deals, and subsidies. The tension between rules-based trade and realpolitik shapes how open global markets actually function. Cross-border externalities are the focus here, highlighting environmental and social costs that typical welfare models ignore. Pollution leakage, weak labor standards, and other unaccounted social impacts create concerns, and while modern agreements increasingly add side accords, enforcement remains weak, fueling skepticism and leaving policy gaps to address. Digital trade blurs traditional borders through global data flows, teleservices, and 3D printing. And this slide maps required policy responses, updating classification of goods and services, strengthening privacy safeguards, and investing in digital skills are crucial. The outcome can capture new gains in efficiency and innovation, but also poses tax erosion and widening wage dispersion risks. To conclude, the presentation offers a concise action list. Lower remaining tariffs, invest in worker adjustment, reinforce competition policy, negotiate green and digital chapters, and monitor distributional outcomes. Open trade is positioned as a tool, not a goal, and it must be paired with domestic reforms to deliver inclusive growth that reaches workers and communities.